Big moves in the economy today. Trump drops tariffs, stock market soars, and new economic data is coming soon. Stick around to find out what it means for you. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host as always, Brandon Shar. Boy, oh boy, did we have a day in the market, folks. Let's start off, first of all, with a little bit of, let's just set the table, right? Let's talk about where we were, where we are now, and what we could be looking at towards the end of the week into next week. First, as always, please make sure to like and subscribe, follow us on YouTube. If you're listening on iTunes, please leave a comment, follow, and it definitely helps out the show. We're going to tackle a little bit today about what happened that was so historic in the market. Stick around to the end and we'll break down what could be coming. So let's jump right into it. So let's just set the stage where we were at. So last week, Trump announced his tariff plan. The market reacted accordingly. We covered this on Sunday. And just to run through some of the numbers of what we've seen over the past week, right? Let's just talk about the loss that the market has had, first of all. The market has lost $11.1 trillion in 44 days. That's equivalent to 38% of the US GDP. That is huge, right? It's contributed to a lot of fears. You have a lot of people checking their 401ks. I heard that it's the most since COVID, I think, that people have just been active with their 401ks. There's a lot of fear right now. There's a loss of consumer sentiment going on right now. Not to mention you got hedge funds that are starting to get margin calls. Yes, we all remember hedge funds and that fun discussion from the GameStop AMC days back in 2021. Well, guess what? Those same hedge funds are getting margin calls again because the volatility in the market is creating a lot of uncertainty, a lot of volatility, and these banks are calling these hedge funds, telling them, hey, look, you need to pony up. And it's just creating a lot of volatile action in the market when you have these hedge funds with these massive positions, massive liquidity that may be coming out of the market itself, right? Not to mention the fact JP Morgan put out their indication of a recession. They put it at 60%. So JP Morgan is now saying there's a 60% chance that we're going to head into a recession. So we've had all this negative news. We've had all this selling pressure in the market, and that's where we've been, right? And here's the thing. When you're in a bear market, as we seemingly have been, the rallies to the upside are really violent because there isn't a lot of liquidity. Price can move very fast, very quick, right? And we're definitely in a situation where we're data driven, right? Any kind of news that comes out can impact the market. And guess what? That's exactly what we got today. President Donald Trump decided to drop a whammy on the stock market in the form of paused tariffs. Trump temporarily drops tariffs to 10% for most countries, hits China harder with 125%. President Donald Trump dropped new tariff rates on imports for most U.S. trade partners to 10% for 90 days to allow trade negotiations with those countries. Trump announced the pause hours after goods from nearly 90 nations became subject to stiffer so-called reciprocal tariffs imposed by the United States. The president also said in a social media post that he was raising the tariffs imposed on imports from China to 125% effective immediately due to the lack of respect that China has shown to the world markets. That was the massive news that we got today. President Trump, he's had this stance all really over the past week. I mean, we talked about how he's talked about tariffs for quite a while when he was running for office and now being in office, putting it in place. We've had these, super high tariffs for the past week that the market's been trying to essentially digest, right? And that's why we've had so much fear and uncertainty and selling pressure. And today, out of the blue, he decided to pause these tariffs. And the key here is that he's only doing it basically for the countries that are, playing along with the US, right? For any of the countries that are not, such as China, he is keeping those tariffs in place 125%. He's basically trying to pit, I feel like, the whole world against China. Might be a strategic move. I heard this is something that he's known from the get go that he was going to do, pausing tariffs, that is. So 10% for most countries for 90 days is massive, massive, massive news. It wasn't anything that the market was anticipating. And we actually got some fake news about this earlier in the week. And now it's not fake news, it's confirmed. So I guess the thing to really think about here with this pause, is this a short-term strategy, or is this a sign of a larger shift in trade policy? I guess that's one of the questions that you could ask. Is it going to go beyond 90 days? Is it going to extend it? We don't really know yet, but what we do know is that we have a 90-day pause, and that is massive for the markets. And we definitely saw that today in the markets. We had a historic day. Take a look here for those on YouTube. This is the heat map for the S&P 500. A lot of green, folks. We had an historic day. You have Microsoft up 10%, Nvidia up 18%, Visa up 7%, Tesla was up 22%. Apple up 15%. It's a lot of green, right? You don't see a lot of red on this map. And we responded accordingly to the news that nobody expected. And it was definitely a much needed relief for the market. I mean, we've just had so much selling pressure. We've been borderline in a bear market. We've been in correction territory. And this was much needed indeed. If we take a look here, according to CNBC, stock market posts third biggest gain in post-World War II history on Trump's tariff about face. I mean, this is insane. The S&P 500 skyrocketed 9.52% in a knee-jerk reaction to Trump's announcement to put a 90-day pause on some of the lofty reciprocal tariffs. The one-day gain ranks as the third biggest since World War II for the main stock market benchmark, according to FactSet. So if you take a look here, S&P 500, I mean, the only days that have been higher since World War II, keep that in mind. A lot of you listening have not been around since World War II. This is insane. October 2008, right? The 13th and the 28th, only 2 days that were higher than today for the S&P 500. Take a look at the Dow Jones Industrial Average. Not as impressive, but still, I mean, hey, it was up over 7%, still ranks in the top 10. The largest day for the Dow Jones was actually during COVID, March 24th, 2020. Take a look at the NASDAQ Composite, second highest day, only bested by January 3rd, 2020, January 3rd, 2001, right, where it was 14%. So massive historical day for the market. And really the question now is going to be, where do we go from here, right? That's the question that I think everyone's asking. If we take a look at the S&P, let's take a look at SPY, right? This was today, massive move. We had this kind of chop. We actually opened up the day a little above 1% after the selling that we saw yesterday, kind of sideways here. And then when that news came out right around 1 o'clock or so, we just had this massive, massive candle. This is a 30-minute candle. I mean, folks, we're talking 500 all the way up to 524, actually 534 on SPY. That's a massive move. Somebody made some generational wealth today. That's my bet. But anyways, if we zoom out here and we just take a look at the year, right? Obviously, we had this massive sell off. We had a new low put in earlier on, what was that, Friday? This was, or excuse me, Monday. We had that new low. This was Tuesday, and then look at this massive candle we put in today. And so now, really, the question is, are we going to, first of all, are we going to close this gap here at 555? And then can we climb back up here? That's really going to be what I'm looking at for the week ahead. We have a couple more days left in the week. And, it's going to be really interesting to see if we get any follow through from this. So, I mean, the Q's up 12% today, SPY up 10.5, 10.50. I mean, you got some of the sectors, right? Like XLK was up 13.43%, massive. SPX, right? Up 9.52%. So we had some massive action to the upside. Let's see tomorrow if we can actually hold that. And as far as where we stand with China, right? Because listen, the pause is great on the tariffs, but we need to figure out where we're at with China. Obviously, that's the country that is not playing along right now with Trump. As of last night, China had retaliated to the imposed tariffs that Trump put on, right? China to impose 34% tariff on all U.S. imports from April 10th. China to also add 11 U.S. firms to the unreliable entities list, 16 U.S. entities to its export control list, and China filed a formal complaint against the U.S. with the World Trade Organization. Tensions between China and the U.S. have not been great. With the pause, Trump seems pretty confident that he can get a deal done with China. Trump has made a career of making deals. And so really it just boils down at this point whether or not you trust that he's going to be able to do that. But boy, oh boy, what a reaction today in the markets. Drop a comment. Let me know how you played it, if you made money, if you were up, if you were down, what you're looking at for the remainder of the week. And speaking of the remainder of the week, we have some economic data that is coming out tomorrow and also on Friday. Now, usually, right, economic data would be enough to drive the market. Right now, we're so data dependent with tariff news. I'll be curious to see what some of this economic data that we have coming out over the next couple of days, how it's actually going to impact the market itself. But nevertheless, tomorrow we have CPI coming out at 8:30 a.m. That should be pretty big. Want to see where that number comes in at. If we look at core CPI year over year, we had 3.1% last month, and the forecast is 3%. So hopefully that comes in lower. That should play well for a continued rally in the markets. We got some Fed speakers tomorrow. And then don't forget, we also have initial jobless claims also at 8:30. Previous 219,000, forecasted 223,000, right? So want to see where that number comes in because the Fed is definitely going to be watching that. They're definitely going to be watching inflation data as well as they try to come to a decision as far as rates, whether or not they should cut them, what they should do, leave them the same. Hey, maybe even raise them. Who knows what Daddy Powell and the team are cooking up. They did have a impromptu behind closed door meeting on Monday, which is very interesting to me. Be curious to see what comes of that. And then Friday, we have PPI data coming out at 8:30 a.m. as well. And then it looks like some more Fed speakers. So you got a lot going on as far as data. Let's see if this can be a catalyst for more bullish action on the market after the historic day that we saw today. We got 2 days left in the week. Let's see if the market can continue to push up, if it can continue to hold. And yeah, We will be back on Sunday. We'll see what the market did on Thursday and Friday. As always, thanks for tuning in. Please make sure to like and subscribe, follow. If you're listening to us on iTunes, please leave a comment. And as always, folks, don't forget, plan the trade and trade the plan. Have a good night.